Ladies and gentlemen, welcome. We would like to start our event this morning, and we would like to start the event with Mr. Njuguna. So I'll just invite him to the podium just to give us a security briefing. He's the security manager here at Serena. Then we'll begin our program. Karibuni. This morning, we'll officially start. Board members, our esteemed investors and analysts, Stanbic Bank leadership and staff, members from the Fourth Estate, ladies and gentlemen, good morning. Welcome to our Stanbic Holdings PLC 2021 full year presentation. My name is Catherine Joroge. I'm the Head of External Affairs and Communication at Stanbic Bank, and I will be taking you through our morning presentation and then hand over to my colleague, Priscilla Were, to take us the second piece of the presentation. I'd like to recognize our board members present and also our executive leadership who have also joined us this morning, and our staff from Stanbic Bank. And on behalf of all of them, we want to thank you for joining us this morning so that we could take you through the financials for 2021 full year. As we are aware, COVID is still with us and it continues to spread globally. So as much as we're having a physical event, please ensure we have protocols observed. We have sanitizers on the table. Please ensure you have your mask on when you're interacting, apart from when you're having your meals, and ensure we sanitize as we go along so that we can all be safe, because we prioritize your safety. As we introduce the team this morning that are going to take us through the presentation, allow me to introduce three of our executive members. So we have our Chief Executive Stanbic Holdings, Mr. Patrick Muhire, who will be taking us through the environment, and Stanbic Bank Chief Executive, Mr. Charles Mudiwa, who will just present through the strategy. And we also have our Acting Chief Financial Officer, Value Officer, Dennis Musau, who will be taking us through the financials. After that, we'll move on to a very brief panel discussion around our digital transformation as a bank, and I'm sure you'll enjoy the program. So allow me to kindly introduce Patrick Muheria so that we could start our program. Thank you.
Morning, ladies and gentlemen, and welcome to this review of our performance in 2021. Members of the media, fellow board members, staff of Stanbic, ladies and gentlemen, I'm pleased to welcome you again to this Stanbic investor briefing. 2021 was a much better year than 2020, despite the COVID challenges posted by COVID and the emergence of several variants. The Kenyan economy started to show signs of recovery across many, many sectors. And at the end of the year, we'd also fought the pandemic with almost 16% of the adult population has been vaccinated. GDP growth over the first 3 quarters of 2021 was on the upside, averaging almost 8%. Cumulative growth over the first 3 quarters of 2021 was 6.5%. Which exceeded projections from the IMF and World Bank, which were 5% roughly. There's evidence that the post-pandemic recovery has been much stronger than we anticipated, and many, many sectors are showing signs of promise. A lot of those that were hit hard by the pandemic, including transport, trade, manufacturing, education, tourism, etc. Even agriculture witnessed a big bounce back. Inflation was on an upward trend, but it actually did remain within, as you will see later, that it remained within very, very low single digit, which allowed, I think, a lot of the central bank to maintain its policy rates. Commercial banks continue to demonstrate resilience with an increase in profitability, strong liquidity, and capital adequacy ratios. NPLs came down from a high of about 14.1% to roughly 13% today. And private sector credit growth rebounded as well to roughly 9% from the low levels we saw in April last year. While this is an improvement, it still remains way below the all-time highs when we were seeing strong double-digit credit growth. Quickly, an update on South Sudan. Unlike Kenya, which experienced 3 waves of COVID, South Sudan only had 2 waves. But because of the large displaced people, and very, very poor health infrastructure. At the end of 2021, only less than 2% of the population had been vaccinated. Whereas there was relative peace in South Sudan in 2021, with a few skirmishes remaining localized, key political leaders, parties remain committed to the peace agreement, despite huge delays in its implementation. GDP growth in South Sudan is expected to reach about 5.3% this year. And the recovery in growth will be largely on the back of oil production driven by higher global oil prices. Quickly on our performance, our focus on supporting our customers to navigate the pandemic, and you'll hear Charles talk about this, rebound and thrive, was able to drive huge sustainable business growth. Our performance can be attributed to our solid business momentum and implementation of the various interventions that have enabled us and customers to weather this volatile environment caused by the pandemic. We did this by providing bespoke digital solutions and client experiences, such as self-onboarding, digital lending, supply chain or distributor financing, etc. I'd also like to thank our employees who remain our greatest strength and really contributed this year to enhancing measures that we needed to remain competitive. We also kicked off a lot of several digital learning programs to train our staff to the needs of tomorrow as our business continued to evolve. We continue to stand by the communities by driving several sustainability programs across the country. And everyone across our business is energized by our purpose of driving Kenya's growth. So against this backdrop, our financial performance reflects growth in the underlying business and is a true reflection of our unwavering support to our customers to help them grow and realize their full potential. The group continued to report strong growth in revenue, which is aligned to our strategy. Our capital, liquidity, and funding continue to remain strong. And it does give me great pleasure to announce that our board just yesterday approved a payment of a final dividend of Kenya shillings 2.8 billion, bringing the total dividend for 2021 to 3.5 billion, as we stand beside our shareholders, delivering them a sustainable return. This works out to roughly 50% of our 2021 profits, which I think is quite remarkable and is a testament of the resilience of our business. Getting into the future, we continue to be conscious of the direct and indirect impact of the pandemic and to monitor its effects on our business. With the rollout of vaccines, we expect a more sustained economic recovery. We remain committed to protecting shareholder wealth and putting our customers first, and continuously innovating to offer relevant customer solutions. The group continues to maintain strong capital and liquidity levels, and we've established strategic partnerships across the region as we continue to support the evolving needs of our customers. We continue to run a very strong business and are confident that the future prospects, as evidenced by the Standard Bank Group's continued increase in the shareholding of Stanbic Holdings, is a huge testament of the future of this business. Lastly, in appreciation, I'd like to take this opportunity to express my sincere appreciation and gratitude to the board, management, and staff for their dedicated service during the year. I'd also like to thank our esteemed customers for their steadfast support and patronage. I'd also like to thank our shareholders for giving us support and assure you of our commitment to make Stanbic a strong player in the region as we continue to try and build a regional bank and sustainably grow our shareholder value. Finally, I would like to thank the government and regulatory bodies for their mutual trust, guidance, and support. Thank you for listening. I think we'll now go into the formal presentation. I just got a couple of slides on positioning, then I'll hand it over. So operating environment, you can see, like I was saying earlier, inflation across the region came down significantly. Even South Sudan dropped to 14%. But you can see Kenya, Uganda, and Tanzania all under 5%. And I think that gave the central banks the license to continue to drop the central bank rates. You can see all-time lows, Tanzania at 5, Kenya 6.5, Uganda 6.5, and Kenya at 7. I think generally that's a very good macro picture, and it demonstrates the resilience of these economies and the fact that they've turned around. If you look at GDP growth rates, Kenya led the pack in 2021, 8%, but then it's a more moderated forecast for 2022 at 5.4, Uganda 4.5, Tanzania 6.5, South Sudan at 6. So a lot of good rebound in activity. There are also some couple of large projects that are happening in the region that we think will boost growth in Tanzania and Uganda, particularly around the East African crude pipeline and oil and gas. We also believe that because of this resilience in the region, we'll continue to attract foreign direct investment. And we're starting to see that as well. And if my region, which is East Africa, is a proxy, because we do track what the region has done from a growth perspective. Even though we haven't come out with the numbers, I will tell you that the entire region, our banking subsidiaries, have grown a healthy, should I call it high double-digit growth year on year. So the macros have worked, and it's really kind of translated into how our bankers perform. Having said that, there are some good things that are looking up. For example, the increased government spending on infrastructure, the high GDP growth rates, the recovery in terms of business conditions with fewer COVID health restrictions, and an improved consumer environment. All those things we think are enablers and will continue to drive the economy. On the less positive side, I think political risk is dialed up a little bit. If you look at the Russia-Ukraine conflict, upcoming general elections in Kenya, they always bring not instability, but sentiment changes. And you start to talk to people about investments for 2022, and many of them are foregoing them for at least, they'll do most of it till the first half of the year and then sit back. So sentiment does change in terms of when you have an election. And of course, the delayed implementation of South Sudan's peace agreement. There will continue to be inflation and currency pressure, particularly as we saw the US is talking about raising rates 3 or 4 times this year. So that will always come back and cascade back to the local currencies. We're also seeing a lot of pressure on the regulatory landscape side with climate risk, ESG, a lot of new taxes being put by the governments imposed to increase revenue. So it's a mixed bag, but I think generally I would be more on the positive side. I think we can mitigate some of the risks that we have on. Right? And then just from a general macro perspective, from an Africa standpoint, we still believe that a lot of the key enablers are still in place, which are the top four there. Expanding markets for financial services is one. Growing mobile penetration and digital payment solutions adoption. Rapid and sustained economic growth, and then increase on focused on sustainable development. So this is what we sort of believe is a foundation of what's going to drive financial services across Africa for the next 5 years. 26% of the total population is going to increase to 1.7 billion in sub-Saharan Africa. There will be 400 million more people in cities, so 50% urban population, which means there will be 220 million new potential bank clients if adult penetration just reaches 50%. So that's even a conservative number. It could exceed that. And then when you look on the digital side, mobile penetration, there's increase in handset penetration because the prices have come down. We believe there will be 1.2 billion subscribers at 100% mobile penetration by the end of the decade, and a huge decrease in data costs. So I think that's more of an enabler as well. We tend to think of the mobile phone and telco as a competitor, but I think that there is a coexistence that helps us as well. On the economic side, we talked about it. We expect average growth in sub-Saharan Africa to grow about 4% over the next 5 years. And this is another one that we as a group are heavily involved in, which is the inter-Africa trade and boosting that trade position and trying to make that a reality. And then lastly, I think in terms of just sustainable development, there will be an increased number of corporates looking to accelerate this and to invest in these areas. So that's what we think, and that's what we believe is going to be a continued driver of growth for us on the continent. And that was it for me. At this point, it gives me great pleasure to invite Mr. Charles Madiwa, who is the CEO of Stanbic Bank Uganda. Charles. Thanks for listening.
Good morning. Thank you very much all for joining us today, and it's great to see everybody around. I think we all kind of forgotten how to socialize and how to meet people because I think we're all holed up somewhere in our own places during COVID. So it's really nice that we can reunite and just come together and share at this moment. My job here is to give you a profile of a reflection of our journey and the things that we've gone through and how we've walked that journey. Just starting up at the beginning, if we reflect where we started when Stanbic CFC came together, I think we've seen a consistent growth in shareholder funds and shareholder value, and we've continued to drive shareholder value during this period. As you can see, our profitability, our shareholder funds have increased from 19 billion to 56 billion as we currently sit. You also see a continued growth and sustainable growth in our profitability, coming, of course, the end of this year, a 39% growth that has been indicated as we have started to see growth and transformation in the business. We've also seen a net value growth, net asset value growth during the same period. So what you are saying is your business and your bank has continued to show growth and will continue to generate sustained value for our customers and also indeed for our shareholders. If we just do a recap of our strategy and what that strategy has been about, we moved over this period to become a purpose-driven organization. And I think it's important to emphasize that we've kind of moved on to say, what is our purpose and how do we support our communities, how do we support our country, and how do we support our customers and our shareholders. And our purpose is very clearly articulated that both for Kenya and South Sudan, this is our home, we drive growth. And it's important because we've been here for over 100 years, having come here in around 1910 or thereabouts. And therefore, we're quite proud of our heritage and the things that we've achieved as a business to drive growth and to continue growing. We also have a very clear vision, which focuses now being a financial services organization. And as you can see, and as the CFO of our Stanbic has indicated, the business has grown not just from just a bank, but you also have an insurance, you also have a stock broking capability. So we continue to expand in terms of the services that we're offering and demonstrate the new value that we can create from other new markets. Our key strategic objectives are very clear. Which is to transform client experience. We believe we need to serve our clients, improve their experience and how they do business with us. The execute with excellency, and of course to drive sustainable value and growth for our shareholders and key stakeholders. Technology is increasingly becoming important, and we have very clear objectives around our technology, which is that it must always on and always secure. It must have future-proof platforms, and a lot of the work that you'll be seeing is around building future platforms and converting ourselves into a platform business. And then, of course, automation and digitization are bringing machine learning, robotics into our sphere as we start to become more and more a digitally enabled organization. Culture is important because as you transform this journey, culture is increasingly important. And in this regard, we're focusing on how do we create agile ways of working. We all need to be nimble and agile. As COVID taught us that we all need to be different and do things differently and work in a much different environment where we're more agile, more nimble. And in this case, we've got what we call our 5 C's, principles of culture, but also leadership is important. How does our leadership show up and what they need to do? And then we've got 6 value drivers that will track our performance that we look at, which speaks to our client engagement, our employee engagement, our, of course, risk, our operational excellence, which will culminate in our financial outcomes and our socio-economic and environmental impact. And I think this is important for us, particularly the social and economic environment, as we look at sustainability and net zero in the general discussion in the world. As Stanbic, we do subscribe to sustainable growth and also subscribe to all the principles of UN sustainable growth and sustainable objectives, which is why I'm sure you can see I'm wearing a UN sustainable pin, okay, because we actually believe and support the UN global agenda on this. Now, if you look at how we've responded as a result of COVID and the things that we have done, the first reaction during COVID was just to deal with responding to COVID. It was a crisis, we all had to respond. Post that, we then came into 2021 and we were looking more around how do we restore the business to parity and start to think about getting back into the groove and start to think differently. And then, of course, as we move into 2022, we're now looking at rebound, what we call adjusting to the new normal, or what I call normalized deviation. We are in this environment where we all have started to accept that this is the environment we're going to live in. We have to start wearing face masks and get used to them and become a way of life, which are very useful for a lot of us. At least people can recognize you quickly, and you can walk around anonymous. But, I mean, they're becoming a way of life, and they're actually a new kind of way that we're all dealing with. Understanding the importance of sanitization, getting to know how to do some of those things. We all have to adjust our businesses to run and manage them in a COVID environment, which is a new normal. That has helped us think differently, be innovative, be agile, be creative in how we deliver value to our shareholders and to our customers. Taking from there, how did we then deliver this strategy and how do we adapt to this new normal? I mean, a couple of things that have come up. The first thing was, how do we defend our current client transactions? And I think you can see that coming up. And what we saw is that during the year, we saw a 20% year-on-year growth on the number of our customers. So we onboarding and digitally enabling all our customers. 80% of our new customers are acquired digitally. So our customers are onboarding digitally, and we saw a 20% year-on-year growth. We saw a 31% year-on-year growth in terms of our active customers, and of course a 36% year-on-year growth on our primary customer base. So this allowed us to start to see growth as we adjusted the normal and came out of COVID and rebounded as we started going forward. But at the same time, we also looked at how do we improve the customer experience during the same period. So we brought in self-onboarding to allow our customers to do more things, give them the freedom of choice and the ability to do things they want to do at their own pace, at their own time, in their own place, wherever they feel, whatever time they want to do it. So banking 24/7 became a reality. I remember speaking to one of our customers who is a dairy farmer. And he was talking about, we need 24/7 banking. And I looked at him and I said, why? He says, Charles, a dairy cow does not know Sunday. Milk will come out even on public holiday. So we also have to start thinking like that a dairy cow does not know it's a Sunday. Our customers want to transact 24/7. And we have to build an organization that enables them to be able to milk on a Sunday and transact with us on a Sunday. We also have to build operational excellence and start to think about how do we build operational excellence around our business. And in this regard, we probably are among the leading banks in terms of putting our loads into the cloud. A lot of our loads now, a lot of our work now is now into cloud. We've built strategic partners with some of our key partners, Microsoft, Amazon Web Services, and we're putting a lot of our clouds and working with the cloud technology as we try to de-risk some of the technology and bring more stability, ensure that we actually build a strong, resilient technological platform for our businesses. In this regard, we also started looking at new technology and new solutions. Supply chain is one of them. Unayo is another one that we've launched out. That are platforms that will enable our customers to get better service and improve their operations. As we start looking at this, we also say, how do we make a difference to the average person and out there? What are those things that we can do? And we realize that unless we start talking to the individual person and look out there in the communities, we cannot make a difference. And this reminds me, there's an African proverb that says that if you think you're too small to make a difference, you've never spent a night with a mosquito. And we realize that even the smallest among us can make a difference. And in this regard, financial inclusion is one of the key pillars of our sustainability and our future as we build this business. To this regard, we started working on how do we get our customers to onboard themselves, but to access financial services in a number of areas. And we started working with the counties, and we're doing pilots at the moment. I know in Nakuru, we're in Wakulima Market, we're doing some work in Nanyuki, we're doing some work in Mombasa. Tomorrow we'll actually be in Kisumu. We're actually putting together work to support the local communities on the ground to make a difference to them. A lot of our small-scale traders were wiped out during COVID. When shutdown happened, they literally, if I use a vernacular word, ate all their capital. And they found they could not have capital. So we have partnered with a number of DFIs, and we are giving them small, effectively non-interest-free loans to be able to restart their business. And last year, I think we've given out almost 300 million shillings of those transactions where we're helping them rebuild their businesses, recapitalize, and to start to function, because it makes a difference. If the smallest among us is growing and seeing recovery, the rest of us will grow. So that's one of the work that we're doing in terms of financial inclusion and improving the lives of our communities. We're also looking, of course, at accelerated digital capability. We're rebuilding that through digital lending. We're rebuilding that through customer onboarding. We're doing work around enhancing the customer experience, and of course, omni-channel that we're providing to give our customers better experience. We also look at sustainability in terms of giving grants. I've already spoken about the 33 million grant funding for SMEs. We announced grant funding. Currently, we're running a campaign where we are applying for SMEs, where we're giving them up to $5 million shillings each for just applying and qualifying. And so we've got a facility where every quarter we'll be giving out 5 million shillings to top 10 winning SMEs who would like to grow and would like to see business growth. So we are quite keen to bring sustainability and growth to the communities that we work with and how we can support them. Our women proposition, DADA, continues to grow. We signed an agreement, as you saw earlier on early this year, with the Women for UN Women, and we continue driving partnerships across supporting our women and ensuring that we see diversity and gender as an important part and aspect of our business and to drive our objectives. And indeed, we are going to continue champion, as we look into this month, champion he for she as a bank, and myself, I'm a champion for he for she, and we want to believe that we can continue to support this agenda. From a people point of view, safety and wellness, I think, continues to be an important part for us. We do recognize that COVID is still among us, and we still need to maintain safety, and we still need to support our communities as we still deal with the pandemic and other hazards that come through as a result of that. So we continue to drive, and we've continued to drive a lot of vaccination to a point where currently, as we sit now, the bank and our staff, over 90% of them are fully vaccinated. And so we're quite proud of that record. And we know another percentage are also even on their booster at the moment. So it's something that we continue to encourage in our bank, encourage our staff that we all remain safe and we all remain protected. We've also done that for our customers, encouraging them to get vaccinated, but also supporting the communities by providing face masks, PPEs, and other accessories required for us to remain safe. We also continue to drive skills change in the organization, and we've started to train a lot of our staff in terms of giving them skills. We partnered with Salesforce to allow our staff to have digital platforms where they can learn and be able to understand the skills that they require to become future-proof and build the business of the future. As we look at this, of course, sustainability is important, and Stanbic, we believe and subscribe to the UN principles of sustainability. And to that extent, we would like to Sorry, I'm told there's a technology error here. Okay. And something has happened. My apologies. I can assure you it's not a hacking, it's just a flip. Okay. And you are safe, so don't rush out. Okay. So we look at sustainability as an important part, and how do we think of sustainability going to the future? To this extent, we did partner with Sun King, where we're supporting a green light capability. And the purpose is that we ultimately are looking at supporting 10 million households in the next 5 years with sustainable energy, green energy. So we're looking at how do we bring sustainability and build that. We continue with ACON on the green bond. As you know, we are supporting 5,000 units of student accommodation, and we're looking at growing that portfolio. And we did a REITs offer for the green bond, and we expect to see more work around this. But we're also looking at how do we provide more skills for our SMEs. And to this end, 10,000 people have been trained, or 37,000 have been trained in terms of new skills to grow that business and to give them new skills. We also looked at health as an important thing, and our focus in health is around cancer screening, because we believe that cancer is one of the biggest challenges we're facing as a country. And to date, we have done 10,000 people have been screened for cancer, both men and women, and something that we keep encouraging and keep driving and encouraging that we support this process around this. And then, of course, we spend 3 million shillings in terms of supporting our communities to needy children, giving them scholarships and bursaries for them to be able to go to school. So we believe that we can continue to sustain and be driven in terms of sustainability. Lastly, we also believe that we are a trusted financial partner. We believe that we are a solid bank, and we believe that we can continue to support you. We've been here for over 100 years. We'll see ourselves being here for the next 100 years. And there are testaments to this. As a result, we voted the best investment bank in Kenya. We also voted the best trade bank in Kenya. We voted the best private bank in Kenya. We also voted the best FX bank in Kenya, the best corporate bank in Kenya, the safest bank for 2017-2018, the second largest market share in home loans, the best bank in Kenya, first runners-up for the regional integrated report in terms of our transparency in our reporting, the best bank in Kenya, first runners-up in East Africa for the best presented annual report, and of course, we are a member of Standard Bank, the most valuable brand in Africa. So I can assure you, we are part of the biggest bank in Africa, the most valuable brand in Africa, one of the best safest banks in Kenya, and the best bank in foreign currency, in trade finance, in investment banking, and a whole lot more. So we want to say thank you very much for supporting us, because without you, we would not have achieved this. Our investors, our shareholders, our customers, our key stakeholders, our regulators, they've all made this possible. And above all, our staff and our directors and our board are represented by our chairman here and our directors who have continued to show us strategic direction, supported management, and given us the vision that we require to succeed. Without them, we would not have achieved this. So I want to say thank you very much as we look into the future and we look at a bright and prospective future where we see more growth and certainly more innovations coming from Stanbic. The last thing that I want to say is that as we look around and COVID is still there, let's always remember this. There's an African proverb that says, don't think that there are no crocodiles just because the water is calm. COVID is still there. Please be safe. Thank you. I'd like now to call our acting Chief Financial and Value Officer, Dennis Msao, to now go into the financial details and share with you insights.
Good morning. Is this going to work, DJ? So as we wait for the slides to come up, thank you, Charles, and thank you, Patrick. So Patrick talked to us about the operating environment and what we've had to deal with in 2020 coming into 2021. Then Charles spoke to us about how we responded in dealing with our clients, helping our clients get through the pandemic and resuscitate their businesses where they needed to, how we dealt with our staff and tried to keep them safe and enable them to work differently because of the environment, and how we've dealt with communities. The horizontal summation of that, and I'm hoping this deck comes up, is a stellar performance for 2021. If I start with total revenue, our total revenue, 25 billion, 8% up. If I blow up that number, 12% up on NII, net interest income. A big part of that on account of improved margins, growth in the balance sheet, and rethinking our balance sheet mix. On the NIR side, non-interest revenue side, 2% up on last year, which is fantastic, given that we had a very slow start in 2021 because of lockdowns impacting trade activity and a bit of, there we go. And a bit of IB activity also muted in the first half of the year. And we also continue to extend mobile banking waivers as we did and started when the pandemic started. If you then look at our cost-to-income ratio, an improvement of 3%, ticking down slowly but consistently. If you open up that number, our staff costs 9.9% up, and that is on account of obviously inflation adjustments, but also as we continue to invest in new skills and grow our staff numbers in readiness for future-ready transformation that we're going through. The positive story there is we've kept non-staff operating expenses flat year on year, despite the investments that we've made to continue growing. Credit and impairment management, more than about 53% reduction from last year. And that is on account of continuing to work with our clients to get their businesses to succeed, because when their business succeed, then we succeed. Most of our clients that we had given moratoriums when the COVID pandemic hit have come back to us and told us, we are ready to start repaying our loans, we are ready to start working with you, and even under adjusted repayment measures. And that is the outcome that we are seeing in terms of our credit impairments. If you connect all those, 39% up on profitability at a group level, a healthy double-digit return on equity in the teens, and we are very happy with that. Earnings per share 39% up, and the dividend 137 up, which was announced by the CEO. So what are we taking out of this? A strong business environment in 2021 and a 50% dividend payout out of what we've made. If you then look at the balance sheet, and that is on the next slide, a stable balance sheet, an optimized balance sheet, and growing in the right areas. So if you open up the balance sheet and look at customer loans, 17% up. So a stable balance sheet, but giving you 17% increase in customer assets, which means we are redeploying our assets to the right classes and the classes that support SME growth, classes that support our clients, and that help us live our purpose, which is Kenya is our home, South Sudan is our home, we drive our growth. If I look at the individual franchises, all of them, CIB, your commercial and business clients, your retail sector, consumer high net worth, all of them growing year on year. If you open up that to the different product classes, all of them are largely up. The liability side, again, a stable balance sheet, but giving you 11% increase in deposits. And the positive story there is that we've seen 17% increase in our current liabilities, which if you go back to the previous slide, then you start seeing where the margin improvement is coming from. I spoke about asset quality, NPL ratio, progressively working with our clients, 11.48 last year. When we announced our half-year results, 9.87, 9.25 today. So progressively working with our clients, supporting them to get back to performance. So we proactively engage with them. We've improved our efficiency and effectiveness of our collection strategies, and we're basically seeing a better macroeconomic outlook, especially given the economies have started to open up. Our earning assets, which is an area that we watch out very closely to ensure that we're deploying our assets and capital in the right spaces, a 3% improvement from 89 to 92% as we introduce more and more efficiencies into our processing capabilities, allow our customers to process their transactions straight through and less of manual interruptions. And we're seeing that paying off in how much then we're keeping in suspense accounts and those transitory accounts. So if you look at the last three ratios, which are largely on the bank side, sufficient liquidity and capital to allow us to continue operating and to allow us to continue growing. If I take a sneak peek on the individual business units on the next slide, which make up a holdings company, you see the bank, which we've spoken to largely on most of the presentation so far. The bank is 94. Bank Kenya is 94% of our entire business. Good performance there. If I look at South Sudan, remains profitable. A bit of a challenging environment. If I look at last year, our bank assurance business looking to explore protection opportunities progressively and to provide protection to our clients. And you can see the result is a 67% uptick in the profitability for the year. SBG Securities, a bit of a tough market from an equities turnover perspective, but remains profitable and remains strong and set to continue growing into the future. So what does this all mean from our strategy and how we've delivered our strategic pillars? A strong rebound in 2021, an optimized and efficient balance sheet, focused on employee safety and productivity, enabling our colleagues to work effectively from wherever they operate. Better asset quality, and you can see that in our NPL ratios and the credit loss ratios. Operating efficiencies, even as we invest more in digital transformation, extracting those efficiencies and reinvesting them in our growth. Increased shareholder value, and sustainably operating within our communities. Thank you very much. I will now call upon Catherine to take us to the next piece of the program. Thank you.
Thank you very much, Patrick, Charles, Dennis. We appreciate your time. Thank you for taking us through the journey of our stories with our numbers. We appreciate your time up here. And now I think we've reached the point where we will ask questions. We are cognizant that we do have our investors, analysts, and media in the room. Would like to invite you to ask questions and we can engage with you. Also, we are live on our YouTube and Facebook channel. So if you can follow the story with us and engage with us and follow the conversation. So please, I'd like to invite the audience to ask questions. Thank you. Yes, we have a gentleman. Thank you.
Thank you very much, Eric Musau from SIB, and congratulations to management for the robust numbers. My question is on the sticky slide, the stubborn sticky slide, but it had important message around customers, around the active customers, how you measure that. Is it with regards to, maybe 3 months, or is it per year, the number of active customers? And then the number of primary customers, because that was also a very robust growth. Is it a combination of the active customers growing as well as the new customers being onboarded? Just a bit of color around that. Thank you.
Thank you for your question. Good morning, everyone. My name is Lilian Onyach. I'm the head of consumer and high net worth business. A lot of the numbers that you're seeing here came through the growth that we saw in the consumer and high net worth. So in terms of how we measure primary customer numbers is based on the number of transactions that a customer performs, and it differs for a relationship managed portfolio and also for our main market. Active numbers is also based on the number of transactions. So to give an example, for the primary customers for relationship managed, you need to do at least 5 transactions and not sweep your account, meaning moving money completely during the month. So we measure you per month. So it's a monthly measurement that we do. The same applies to active, but for active customers, it is 1 transaction per month. So that's how we measure our primary, and it differs based on the client portfolio. Thank you.
Thank you very much, Lillian. We're still open for questions. Please feel free. Yes, there's a gentleman there from...
Good morning, Davis Kathinji from Sterling Capital. Was wondering if you could give us some insight on the status of your loan repricing formula approval by the CBK.
As you answer that question, I would advice you kindly stand at the front so that the media can also capture your answer, please.
Thank you very much for that question. Just to just add on what Lillian has just said on the primary customer piece, I think the significance of it is that we're deepening our relationships with our clients. So if you're seeing our customers growing, but not just growing the number of customers, but the customers actually bank with us a lot more. So that shows the deepening relationship with our clients, and that's why it's important for us to measure that we're actually deepening our relationship with our clients and building more trust with our clients. Regarding the risk-based model, we have submitted our application to the central bank. We have received feedback with them, and we're in constant dialogue with them in terms of getting that process through. I believe we're towards the tail end of it, and we're seeing good progress in terms of our discussions with them, and we're expecting some outcomes soon. But we are in engagement with them, and we're discussing with them, and it's an ongoing dialogue. It's a conversation and a dialogue.
Thank you very much, Charles. We're still open for questions. Yes, Bella, please go ahead.
Thank you. Good morning. My name is Bella from Bloomberg News. I notice you have an acting Chief Financial and Value Officer. Could you please give more information on that? Is there a change that's happening? My apologies if you had already spoken to this. Thank you.
Yes, we are. There will be a change in terms of our finance officer. Our current finance or the old finance officer, Abraham, has moved to a new role within Standard Bank Group. So he has not left the bank. He has moved to another new role within the Standard Bank Group. And therefore, Dennis is the acting Chief Financial and Value Officer. Yeah.
Thank you, Charles. Thank you, Bella. Do we have any additional questions? Bella, she has another question.
Sorry, I should have combined this. What's your outlook for the year going forward? It looks like, given your performance for last year, it looks like things are looking up. Or you could just maybe tell us which areas are most exciting for the bank going forward. And if you could also speak about what's your sense of the elections coming up in August. Thank you.
Thank you very much for the question, Bella. I think first and foremost, we're optimistic about the year. We certainly have seen the almost the COVID, kind of waning, and we hope that is sustainably waning, and therefore we are optimistic about this. The fact that we are now having these physical meetings here, I think is a sense of optimism that we carry around looking at that. So we've seen the country reopening. We've seen some sense of businesses trying to look at their opportunities and seeing what they need to do to grow. So we are fairly optimistic around that. We certainly have seen a rebound in a number of sectors. And so if you look at the broad economy, agriculture is important to us. We've seen a rebound in that area. Floriculture, we've seen a strong rebound coming through as the economy has kind of picked up in the year. Infrastructure investments, I think, continue to happen, and we're seeing more support coming through, and therefore we see ourselves working that. Some of the key sectors that we play in, I think home loans and housing, I think we're still driving that agenda, and we see opportunities coming from there. Energy sector, we see opportunities coming through as, of course, the economy comes up, we're seeing some growth coming through there. So we're quite excited about the outcome of that process and the economy coming back. The elections, if you're asking whether it's an economic impact or not, and what it means for us, I think we take them in our stride as a business, and we work through them as we see it going forward. But I cannot comment on the elections because I'm neither a politician nor a voter, so I'm not qualified to comment on that.
Thank you very much, Charles. I think we have another question here. Thank you.
Good morning, everyone. My name is Solomon Kariuki from AB Axis. I have two questions. One is on the Unayo platform. When should we expect a fully fledged rollout into the market? I ask this because I haven't heard any noise you promoting it. And maybe you can even shed more light on how it's going to impact your business in terms of your access to your clients. That wasn't clear from your presentation. My next question is on, given the current geopolitical happenings, do you expect that to affect your trade financing business in case of an escalation?
Thank you for your question. Marianne Mishuki, looking after innovation. So Unayo, we've had a very sort of kind of structured approach in terms of how we do our acquisition. Basically, what the platform does is allow us to serve the main market or mass market, which we previously haven't. And to Lillian's point earlier, this is an area that's driving our growth. As you know, in the normal way of innovation, we have capability today, but we continue to build on it. So we've selected specific areas which we are working in Nanyuki, in Meru, in Nakuru, and in Gikomba as well. But as we go into a national approach and build our distribution, then you'll see a more national campaign. So very targeted for now as we build our distribution and then and our capability. And then after that, we'll then go into a national campaign. But you know, we've been in the market now for 3 months, and we've had very impressive growth and feedback from customers, and the appetite both on acquisition and usage has been quite good. Thanks.
Thank you very much. This is a fantastic. Oh, sorry, Charles.
Geopolitical. Assume you're talking about the current Ukrainian-Russian issue. I mean, like any war, it has its own consequences and destabilizing effect. Of course, the most noticeable of which I think we've seen to date is, of course, the oil price going up. We've seen some stocks taking a knock as well. So those things have all a trickle-down effect on us in terms of inflation and the impact that it creates from a geopolitical point of view. One, of course, hopes that it does not escalate beyond where it is now, that it doesn't become a full blown-out European war, and we all see that there's some negotiations going on, so we believe that if they do yield a result, then it will be contained to that. How do we think about this? Of course, like any business, we also monitor these things consistently, ensuring that, number one, since we're talking to our investors and shareholders here, the first thing is we protect our shareholder equity and protect our balance sheet to ensure that the bank remains sustainable, solid, and sound. And as our finance officer has indicated, we're fairly well capitalized and we fairly have a strong balance sheet which can be able to withstand anything. Secondly, of course, we have to manage liquidity and ensure that we are sustainably and we continue running the business. So yes, we do factor risks that come into play and do manage them as we look into the future around how do we manage our balance sheet, how we ensure that our balance sheet is protected, how we ensure that our liquidity is protected, and of course that shareholder value is retained and we still be able to pay earnings to our shareholders.
Thank you, Charles. Just checking if there are any more questions. It's a great conversation. In fact, it seamlessly takes us to our next session, but there's another question where we will definitely talk about more of the digital transformation from the bank perspective.
My name is Elizabeth Kivuva from Business Daily. My question is on the SPG. I think securities, that is one key business for the Stanbic. But I felt like you brushed a lot on that. So if you could go back to it, I mean, maybe give details on what maybe you feel like was more affected on that business, and also on the South Sudan, also down. What are you expecting maybe for this year? And also something else you mentioned about automation and robotics. So how is it going to affect Stanbic in terms of operations for the employees and also the branches that you have?
Yeah, morning, and thanks. I'll answer on SPG securities. So indeed, our year-on-year bottom line was down, as indicated there. And you can see the comment is there was a reduced, so it is two-front. There was an overall reduction in equities trading volumes, but our own market share also did decline from 14%, to 12, about 13% the previous year, to about 9%. And so that in itself, because our business is mostly, driven by the volumes that we drive in the market. So when our market share is down, it means our volumes are down, and also it means our bottom line is down. Does that help? Sorry, I can't hear you. Or for the decline in our market
Just
share.
wait for the mic. Maybe just please give her the mic. Thank you.
A follow-up on the same, the reason for the reduction in the market share.
Yeah, so most of our business is international business. We did have a change in our operating model. In 2020, at the beginning of 2020, our group generally changed. We used to work with ICBC London, ICBC Standard London, which was our international franchise. And that model didn't change. So the ICBC London business, ICBCS, which is partly owned by Standard Bank, diversified or divested from the equities business. And we had to change that model for us to run that from Standard Bank in South Africa. So coupled with the fact that obviously we had a COVID environment, and also that shift in the business model did change, but we are quickly catching up, as we rejig our model. Thanks.
South Sudan, the reasons really are largely because we had a difficult operating environment in South Sudan, and therefore we found a difficult environment operating this year. We're looking forward to a much more sustainable growth next year or this year. We should see our numbers going up much better than we did. I think what is more important is that we've seen a much more stable environment now, and we are looking at our business continue to be profitable, and we're looking at opportunities for growth in that regard. I'll ask Catherine just to answer the question on the robotics piece and what that means. Catherine is our Chief Head of Engineering.
Thank you, Charles, and good morning. So two things. From an internal staff perspective, looking at one of the benefits we've seen is giving staff meaningful work. So a departure from manual, repetitive work, and of course, engaging a bit more the brain power. That's one. How does this impact clients? We have better turnaround time. So for example, where we have bulky transactions, say, for example, we need to process reversals, better experience for our customers because we're able to refund funds in a much faster way. Thank you.
Thank you very much. Any more questions? I really would like us to move to a very brief presentation. A lot of your questions have been around our digital transformation. What are we doing with our clients? How are we changing our organization towards ensuring we benefit from a digital perspective? So I will kindly hand over to Priscilla Wera, who's our Head of Investor Relations, just to take us through that very brief panel discussion, and we could have more questions from there. Thank you, ladies and gentlemen.
Thank you, Catherine. Good morning, everyone. As Catherine mentioned, my name is Priscilla Were, the Head of Investor Relations. And I would like us to move to the second part of the agenda, which is to discuss our strategy and our digital transformation journey. And to kick off the conversation, I would like to invite the panelists, led by Charles Mudiwa, Miriam Michuki, who's our Head of Innovation, Catherine Muraga, who's our Head of Engineering, and Edwin Mushai, who's the Chief Risk Officer. Please join me on stage, then we can start off the conversation. So the main purpose of this session, ideally, is to create a little bit of color around our digital transformation journey. If you did recall, sometime last year, towards the end of last year, we did announce that we are moving into a platform business from traditional banking in order for us to be able to create more value for our customers, more value for our communities, and also for us to be able to improve our shareholder return to the investment community. With that, I would like to kick off the process. And Charles, the first question goes to you. From a Standard Bank perspective, Standard Bank did announce that as a group, we are moving into a platform business. What does that mean for Kenya?
Thank you very much. So early last year, we rolled out our new strategy, which speaks to building what we call a platform business. And a lot of people ask, what does that mean? And the analogy we use in the bank is one of a mall. So if you think about it, right now we see ourselves as just being a shop in a mall. But we are moving away from that and say, why can't we be the mall itself? So the idea is for us to create a business where effectively the business or our technology is built to become a mall. And we would have different people or different shops in that mall. And so the whole idea around Unayo, around some of the technologies that we're doing, is that we have different parts of the business. And if you think about it in a mall, when you walk in the mall, what do you see? You see a shop for clothes, you see a shop where you go, a supermarket where you buy groceries, you see a hardware, you'll be able to see a whole lot of electricals, you can buy a phone, a pharmacy. And what we are looking at is ultimately, when you move into our Stanbic platform, you must be able to do all your life transactions within the bank and be able to see all the services you require in the bank. That's really what we're trying to do. In other words, become a financial services mall for our customers.
Thank you, Charles. That sounds really, really exciting. One-stop shop. Aren't you guys excited? I am. And for us to be able to deliver that, for us to be able to deliver a mall, to deliver a one-stop shop solution for our community, for Kenya, and also the markets that we operate in, that means we need to innovate. We need to craft out new ideas, new solutions for our clients. So my second question goes to Marianne. From an innovation perspective, what does that mean in practicality?
Thank you, Priscilla. So just, following on Charles's analogy on a mall, so today, Unayo, you're able to pay. So I can pay for my goods, I can send money to somebody else who's on Unayo or to a bank account. But a merchant can also receive payments on Unayo, that's today. But currently, we're also rolling out Unayo Pay, which is to say some of the merchants who today have a very offline business can load an online catalog and then be able to request for payments and get paid, which means that for me as a distributor, I can issue invoicing and make sure that these things are fully automated and online. And more importantly, my reconciliation becomes easier, so I'm not doing another parallel process. I can also track where I'm giving somebody 3 days credit, 7 days credit when it's due, and also be able to send reminders on that. When we digitize that process, what it means is that, say, a customer who has 30 retailers, and we can see their transactional history, it also allows us to then be able to bring in a lot more services. On top of that, as we understand these customers, if you think about a typical, market, say in Nanyuki, where we're working with several traders, they have other needs, as an example, which is to save amongst themselves. We know a lot of them have got merry-go-rounds or even, sort of kind of informal savings or charmers. So the other thing is to incorporate some of, the saving capability onto Unayo. So Unayo today does payments. It's allowing us to also allow people to digitize their, sort of kind of ordering and invoicing and reconciliation. But as we go along, then we add a lot more services. So that's the way we're thinking about the more. And this also goes to the other segments. The other example I would give is, speaking to Charles's earlier point around our strength in agriculture. So today we support dairy, we support floriculture, but largely that has been at a corporate and commercial banking level. So, but the reality is
that for that processor, dairy processor to, to do well, we need to make sure that there's high quality milk from the farmers. We need to increase productivity and the like. So what we are then building is for us to be able to serve the entire value chain from the small scale farmer to the other players, the agronomists, the feed manufacturers and the like, to make sure that we create as much value through the ecosystem. And that's what it means to be a platform player.
Thank you, Marianne. That's really, really nice. And maybe for me to kind of connect back to what we've discussed today from the presentation, if you look at our strategy, a lot of work has already happened into creating the foundations for us to move into a platform business, or rather for us to be able to create the mall. There's a lot going on. There's the engine behind it. There's the oil that glues everything together. And that brings me to my next part. So for us to be able to operate efficiently and understand our clients, understand what our mall is, whether it's making money or not, whether in the right direction, we will need technology to drive that. We'll need data to drive that. So my next question goes to Catherine, who's our head of engineering. Catherine, tell me, from an engineering space, how are you supporting the bank strategy to move into a platform business?
Thanks, Priscilla. I like two things that Charles talked about. When each one of us visits a mall, you want to find it always on. It's accessible, utilities are working, it is in a state that they promised. So the fulfillment piece is very key. A key parameter we track internally is always on. Essentially, our capabilities being available for our customers. That's number one. How do we do this? Charles spoke about our multi-cloud approach with regards to, I'd call it modernizing our infrastructure. Because as you would know, similar to other platforms, they do use modern technology. Lillian spoke about, give a bit color of the number of growth, if you look at customers, primary and active customers, we saw last year. One of the advantages of cloud, it allows for that elasticity, improved go-to-market. Again, going back to the mall analogy, at any given time, the mall at times has huge capacity from a foot flow perspective, and at times it's low. The same thing from a technology perspective. Some of the benefits of using cloud, when transactions are up, and we have seen year-on-year growth, double-digit growth, for example, from a payments perspective. But how are we able to avail this to our customers? Through use of cloud technology, as an example. Again, on always on, there's something that Charles talked about. A dairy cow does not know whether it's Sunday, public holiday. Again, it's always on. Going back to the key parameters we track from an availability perspective, which drive our customer experience. You talked about data. Key things we are doing from a data perspective, laying the foundation so that we can build on personalization. We want to engage to our customers and talk to our customers directly, things that are relatable at an individual level. But also, at engineering, we continue to provide insights, refined insights, to better understand our business and the markets and the customers that we serve. So in a nutshell, technology refresh, adoption of new technologies such as cloud, and use of data to better understand the customers and segments that we serve in, and also provide richer insights into our business. Thanks.
Thanks, Catherine. From what I've heard, if I can reflect on the conversation that the panel has had, we are moving into a platform. We want the platform to be functioning. We want it to be on 24 hours. We are connecting with partners to be able to deliver interesting value proposition, meaningful value propositions for our clients, our communities, and the Kenyan market, and also from an East Africa region, the markets that we operate in. With that said, when we connect to third parties, there's some level of risk. When it comes to technology, using data, data is a big thing. It's money, and people will always want to get a hold of the data. So my next question goes to Edwin Mushai, our Chief Risk Officer. How are we reinforcing the business to ensure that we are protected, and at the same time to ensure that we are protecting the value of our shareholders. So Edwin, over to you. What does it mean from a risk perspective?
Yeah, so thank you very much, Priscilla, and the people who've come before me. So risk is really the engine room of the bank. It is where, in a sense, a lot of the needs of the bank are fulfilled either directly by our credit teams or us as a second line doing the things that you're talking about, which is making sure what Charles said earlier, we are the safest bank, we are trusted by our customer. How do we make sure that happens? As we continue to build a different bank, which is what Charles is talking to, we are building a different bank that is going to be powered by technologies, and some of these technologies are new. And more importantly, and to the customer numbers that we've just demonstrated, a much bigger organization. So that talks to me to a number of things. One is scale. So the way you respond to a bigger animal is very different to perhaps where we've come from. The second thing is really being able as a customer, and last year was a real test for us, how do we make sure that your money is safe in Stanbic? So issues around cybersecurity, we're a very, in my view, a big leader in that space. The latest technology, just making sure that criminals don't get access to our customers' money and providing that assurance. And more importantly, customer experience. So scale and customer experience are very central to how this journey evolves. And if I think the second point around customer experience, and in particular to the credit proposition, how do we make it, to Catherine's point around 24/7 banking, that you can access a savings product, you can access a current account, and you can access a loan. So in the journey we are on, where we will land to on this journey is that as an individual or a business in Stanbic Bank, we will be able, through some of the investments that we're making in technology, through investments we're making in data, and in a way that is logical, that has been credit assessed, we are able to provide security, liquidity or credit at any point in time. So credit's response or risk's response is really to say that your money is safe through the work we do in cybersecurity as a second line, supporting our colleagues in technology, and more importantly, that customers can access credit in the way that connects to the current expectations of the bank. So digital credit is a big thing for us. And some of the technologies Charles had talked about earlier, machine learning, for example, robotics in reconciliations, for example, is another area that we're working very hard on. If I can just give you an example of what this means in terms of velocity. We launched our digital lending proposition in March last year. So it's the first time we've done it. It's for existing to bank customers. In the 9 months to December, end of December, we lent 6 billion shillings to about 4,000 customers. The total book before we started this product, believe it or not, was about so when I put in the 6 billion, that is about 33% of the book. So in 9 months, we've grown the book 33% in a solution. Can you imagine what's going to happen when we open up this to new to bank? So the next journey for us is then to say, how do we open this solution to new to bank? So when we land Unayo, we allow you to pay individuals, to pay merchants, to borrow, and so on and so forth, even when a new to bank customer. So that's the journey we are on. Risk played a big role of ensuring that this is done in a secure environment, that your money once in the bank is safe, and continues to build on some of the aspects that we talked about around a safe bank and a bank that one can trust. Thank you.
Thank you, Edwin. You've brought a very interesting angle around co-creating with the rest of the organization, and not only looking at it as a cheap whip to ensure that our revenues are protected, but also you've looked at it from how do we ensure that we are agile enough to co-create with business, come up with new solutions so that we are able to lend more money and allow businesses to grow, allow customers to have access to money, enable financial inclusion through some of the solutions you've mentioned, like digital lending, and also just ensuring that also from a credit perspective, what are those other things we can incorporate to ensure that we are delivering an interesting and a wow value proposition for the entire market. So thank you very much. And everyone, as you've heard, I think credit and risk has actually shifted its move, and it's an exciting way. Rather than only reinforcing the business, we are also co-creating solutions. So thank you for bringing that up, Edwin. With that, if it was up to me, I would like to continue with the discussions. We'll go on and on, but I am conscious of time, and I do understand that we have very important people in the room, and I would like to actually bring the meeting to a close. But before I do that, I would like to invite Charles to give us closing remarks. Thank you, everyone. Thank you for your time, and continue banking with Stanbic. It is the future. Thank you.
I think what remains is for me is to thank you all for joining us today and being here with us. We really appreciate you taking the time to join us. I think the critical takeaways for us is that we are resilient. We've shown that we are on the rebound. We're clear about what our strategies and what value propositions are. The key for us, as we have seen here, typically we normally would have brought our customer segment heads to this conversation, and this typically would have that in the past. We've deliberately brought our technology and innovation and our risk teams to the front to demonstrate that we see the future lying in our innovation and technology capabilities, and our ability to innovate and adapt to the new changing world is critical for us, and that we are building a strong technologically based bank that actually ensures that we can actually weather the storms that we're all facing in the future. So we can assure you at Stanbic that we're committed to not only supporting Kenya and South Sudan and driving their growth, but also to delivering solutions to our customers that are futuristic, sustainable, and above all, ensuring that we fulfill your dreams and aspirations. So we want to say thank you very much for joining us and being with us today. I also want to thank our partners at Liberty, who have also managed to join us today, and we wish them all the best as well as we start building a strong relationship with Liberty going into the future as part of our insurance value proposition as well. We want to thank you, everybody, and wish you a great day and have a great time. Thank you.